Ladies and gentlemen, Happy New Year to everyone and welcome to Only Trade to Win. I do not have any stock tips or recommendations for you. I do not offer to buy or sell anything. But what I do have is a methodology that took 25 years to put together. And the intention of my channel is to teach you the basics so you can go on with your investment journey and learn how to earn on your own. Today is January 4th, 2024, 7:15 a.m. New York time, and we are continuing with our first annual review. We have completed the indexes review on Tuesday, and the only update we have is that in the last month of the year, our Sigma Russell got well. Here you can see in column number 5, up 9.9% for the month, and for the year, pushed ahead of the Dow, finishing up 14.5%. So when we go into 2024, let's stay open-minded and think that any stock can go to any price, and it also can come back down to zero, which of course we're hoping not our case. It was quite a spectacular year with our 7 stocks returning anywhere from 48.5% for Apple to 234% for Nvidia. And today we're going to look back at our 3 champions, Tesla, Meta, and a champion of them all, Nvidia, up 235% for the year. Let's begin with our champion, Nvidia. It is the leading chip maker for the artificial intelligence industry that's been exploding with growth in its first year after being available to the general public. The stock began 2023 below $150 share. You can see it right here, number 1, and it finished the year closing at $495 on December the 29th, just a few points shy of its all-time high. And the total return for 2023 for Nvidia is a whopping 234.5%. What is even more spectacular is if we look at the bigger picture, and this is weekly, after reaching the purple number 1, its previous all-time high of $345 a share back in November of 2021, the stock lost 67% of its value. You can see all the way down to number 2, and it traded as low as $108 per share 11 months later after its previous all-time high. And in another 12 months, it became a $500 a share stock. Now, this emphasizes one of the most important concepts in trading and investments, flexibility. We never know where the market will be a week or a year from now. There were endless times before when stocks made all-time highs and then sold off. This 67% drop in 11 months for Nvidia in 2021 to 2022 is just a part of the deal. And those of you who are long-term investors need to either accept this part as part of the deal or find another way to address this issue. Because if you decide that you are an investor and your stock loses 3/4 of its value and you sell, it's over. By selling out at the bottom, you lose that money forever. And if it was the case with Nvidia for last year, or most NASDAQ stocks in 2023 for that matter, you'd be really sorry that you did that, and you'd be buying only 1/3 of shares you had down at 108 right now at 500. Now, someone who buys Nvidia up here could probably see a 100-point pullback before the stock goes up and sets new all-time highs. I hope not, but again, nobody knows where the market is going next week or next year, and one of the things that we know is that a lot of people do not want to sell before the end of the year because in the United States, all the income earned previous year is due the following spring. Now, if people sell their stocks in December, they have to pay their taxes in April and in May. But those who wait till January, they have to pay tax a year and 4 months later. So just by waiting 1 month, they gain a year having the money that they would have paid in taxes. And for some traders, it adds up to be quite a significant amount. So the weakness at the beginning of the year is quite normal because some people starting to take profits from the first trading day. But again, we looked at this stock traveling from 1 to 2 and losing 67% of its value before going up to 130% and actually quadrupling in value from the bottom, actually more than quadrupling from the bottom in value. Just so you have a plan on what to do next time, because there is nothing new in the markets, maybe the names of hot stocks or hot sectors, but the fact that the envy, fear, and greed dominate the markets has not changed since day one, and it will be the same forever, just because human nature does not change. And if you know that, and you are aware of that, and can catch that feeling or those feelings in yourself, then you are already ahead of the game. Now we're going to switch gears a little bit and do something different that we haven't done on video here before, and that's actually look at the fundamentals, because I believe that every technical rally has some kind of fundamentals behind behind it. And in case of Nvidia, we have to go back a little bit more than a year ago. And right now we're looking at November of 2022, and that's the quarter when Nvidia missed its earnings last time. As you can see here, the estimates were 17% above the numbers that they came in with, and that number was 58 cents per share. So for now, we just remember this number, 58 cents per share a year ago in November of 2022. Here are the next earnings that were released in February of 2023, and here we're looking at Nvidia actually beating the estimates by 8.5%, reporting 88 cents per share. The next quarter that ended in May of 2023, the company beats estimates by 18%. The quarter that was reported in August 2023, it beat almost by 30%. And the last quarter reported in November of 2023, it again beat by a little more than 19%, reporting $4.02 of earnings per share. So if the earnings reported a year ago in November of 2022 are 58 cents per share, and the earnings reported this year in November of $4.02, that represents a 593% increase in earnings per share in just 12 months. And that this last year rise of 234% was quite justified by the fundamentals and the earnings of the company. So if we apply these earnings increase to the stock price of about $140 a share a year ago, then the stock price of Nvidia should be somewhere around $830. And with that in mind, I am proud to present the first watch list stock for 2024, Nvidia. It has everything going on for itself. Most importantly, the CEO of the company, who is one of the most humble and driven CEOs on Wall Street. Our next stop is Meta. Meta is our champion of comebacks. The stock was down over 75% in 2002. You can see it from this green number 1 all the way to red number 2. After it made its previous all-time high of $378 a share in 2021, it dropped all the way down to $88 a share. Many of the high-paid analysts and portfolio managers thought that Mark Zuckerberg is wrong about spending so much time and money on developing his metaverse, yet all portfolio managers who sold Meta last year are real losers this year, because Meta, as you can see from this number 3, ran straight up to number 5, making over 190%, pretty much straight up move this whole year. And right now we are sitting at a very interesting spot. It is the spot of number 4 resistance area that goes back all the way to January of 2022, from where the stock sold off quite heavily. Yet it looks really strong, working its way through the top of this resistance range. So we go back 4 quarters, and now we look at the fundamentals of the company. In October of 2022, the company missed by 13.5%, reporting $1.64 per share. If you look at our picture, you can see that this was the bottom for the sell-off from $378 right here at $80. Now our next earnings, when you see red here, E, it means that the company missed it. So we look and see that Meta had another miss in its earnings per share, missing it by 22%, which is even worse than the quarter before. But the interesting thing, that the sell-off was over and the stock moved from $88 to over $120 where it began this year. In other words, there was almost a 40% move before the company reported another miss, which was worse than the one before. And if we look back to February, when the earnings were released and the company missed it by 22%, the stock price kept up almost by 20%, and it actually never looked back. It never traded at that territory. So whoever was buying it here probably knew that the next quarter, Meta will beat the earnings by almost 9%, and they will beat it a little bit the following earnings, and they'll blow the roof of the top of this building by coming in at the end of the 2023 and reporting earnings of $4.39 a share, which is more than 20% better than the analysts estimated. That represents a 168% increase in earnings per share in just 12 months. And because the stock has shown so much resilience, it actually serves as a great example that anything is possible in the markets. When the stock sells off more than 75% one year, and the next year it's up to 130, there is only one thing that I can can do, and it is to add Meta to our 2024 watch list as a stock number 2. Now, our third place this year took Tesla, and the volatility of this stock can make anyone's head spin. If you look right here at number 1, this is back in November of 2021 when Tesla set its all-time high and traded above $400 a share. Now, for the next 11 months, the price went from number 1 to number 2, and Tesla lost over 72% of its value and traded as low as $102 a share at the beginning of 2023. Yet the stock was able to reverse, and by July, it was trading at $299, making it all the way to the top of this resistance range number 3, from where the price dropped significantly back in September of 2022. Now, if we look up to this point, we had a little less than 6 months to go till the end of the year, and the stock was up already 145%. Now, from July till end of the year, it was very uneventful because Tesla did not participate in the broad market Santa Claus rally we had. I think it was so strong that even it looked like everything was going up, even the stocks that were totally beat up and had no fundamentals behind them, but for some reason, not Tesla. So we wait and see what the stock will do next year. And for us, unfortunately, Tesla will not make it to the 2024 watch list because, first of all, it is too volatile, and there are other stocks that are better suited for this channel and the purpose of sharing with the beginners the fundamentals of trading and investing. And as a beginner trader or investor, one of the concepts that you need to study is relative strength. A lot of stocks and indexes made their all-time highs, and even more made their 52-week highs in December. So the stocks and indexes that did not make it at least their 52-week highs must have a good reason that is already being reflected in its stock prices. Otherwise, why would a wonderful company like Tesla sell at such a huge discount, even more than 60% from its all-time highs? Well, we do not know the reason, but if we wait long enough, we will find out. They will probably tell it to us on TV, but by then, it will be too late. Maybe like it was right here when the stock traded at $100 a share. One of the things before we talk about earnings a year ago, we can see that Tesla had a stock split on August 25th, 2022, and it was a 3-for-1 stock split. What that means is that the company issued to all its existing shareholders 3 new shares in exchange for the 1 old share they own. Now, the new shares are priced 3 times less than 1 old one, so investors ended up with exactly the same total value of their new shares. So a year ago in October of 2022, it looks like Tesla came in line at $1.05 earnings per share, and they missed it by 2% on revenue, which in case of Tesla is $528 million. Small percentages, huge numbers. And of course, their reported revenue was $21.45 billion. So I guess $528 million is just a small 2.4% piece. So our next event, if you look at number 1, this is the beginning of 2023. And you can see that the price of Tesla bottomed out before its next earnings were released. Again, it misses a little bit on revenue, but it comes ahead of expectations on earnings per share. And one reason that we love when companies come in on better than expected earnings per share, while the revenues may not be as strong, is that it shows that they have very efficient cost management. The quarter ended in April 2023, pretty much in line with expectations. And here is the quarter where the stock price made its 52-week high. And again, look at this. This is another example that there is no news on Wall Street. Tesla beats by almost 15% on earnings per share, and finally it was able to generate higher revenues. Now, if we look at our picture, From number 1 to number 2, Tesla either missed on its revenues, or at best it came in line with expectations. However, the stock went up 145%. And now let's take a look at the last quarter and see if we have any surprises here. That misses again 10% on earnings per share and 3.5% on revenues. And here is our explanation why Tesla has not joined the Santa Claus rally. Behind any technical move, there is always fundamental reason. And the reason why Tesla did not join our party and ran up as all other stocks was because they had some issues meeting the expectations, and by the time the numbers were out, the stock lost almost 25% of its value. So 114.4% annual return in 2023 for a third place Tesla is quite an accomplishment to celebrate. I think by Tuesday we should get some kind of an idea on what's going on with the markets and have another interesting show for you. I hope this review was helpful to you, and more importantly than anything, leave a question that you may have down in the comments below, because this is the only way that I can help you and also improve my channel. And remember that anything is possible in the market, and if a stock is down 70% one year, it doesn't mean that it can be up to 150 next year. Thank you for your time and attention on this annual review. Navigate with care, and I will see you next time.